Pharmaceutical name Sun Pharma continues to languish at the day's low. It's down 6.5%. But on the flip side, Aurobindo Pharma continues to pile on gains, and that's higher by nearly 4.5% in trade. The numbers were in line with street expectations. The commentary was positive. In fact, ace investor Rakesh Jhunjhunwala quizzed the management on their Q4 earnings in the conference call, especially on the European business outlook. Listen in to a slice of that conversation.
My second question is about the European acquisition and the American acquisition. How profitable is the European acquisition and Netol?
For last 3 quarters, we have turned PAT positive, and a whole year basis also we have remained in a positive territory. And this is because of the streamlining of the structure and processes. Going forward, we see the India transferred product will contribute to a better margin.
But what kind of margin are you looking at?
Right now, we have just turned PAT positive, and I think our long-term guidance was when we made acquisition that by FY 18-19 we will be single high-digit percentage profitability.
Oh.
And we are right now slightly ahead of it, is what I would say, Sanjay.
Sorry?
Yeah, we are in fact ahead of that particular commitment. Whatever 3-year turnaround plan, we are right now ahead of that. I mean, in fact.
No, but that drives down the overall margins, no? I didn't get the business around 400 million euros.
It would improve, sir. It would improve. That's right. That your observation is right. And what Sanjeev said is like exactly whatever 3-year plan we are sticking to. In fact, Sanjeev.
So, why don't you give us the margins independent of Euro? Because otherwise we don't get an idea. See, you give us 23.5% margins. There you have 3%, and that's a significant part of your business. So your margins ex-Europe are much higher, no?
No, Rakesh ji, from the day one when we had acquired itself, like it was having 20 million euro of loss, we brought it down to less than 10 million euro was what was the first years of commitment. Second year we were supposed to be EBITDA neutral, whereas we were even PAT positive. So what we are saying is like we understand that whatever margins which might be lesser here will affect the overall business. We understand that, but we are absolutely aware of it, and we had a clear plan, and we are in fact ahead of the plan is what I'm trying to tell you, Mr. Rakesh.
What about Netral?
Netral, in fact, the EBITDA is better than even company's average EBITDA, sir.
Really? And what is the volume?
The volume is, we had around 14-15% growth year on year on the top line, sir. When we took over, it was around 96%, it was around 96 million net revenues. We closed somewhere around 110, 111 million this year, rather than the last year.
All right, then let's focus back on earnings.